I'm Corbett Wall with DVAuction, here with your feeder flash for Wednesday, October the 25th, brought to you in part by Bovolus Vision. Bovolus Vision are clostridial vaccines that spur cattle forward and never backward. The spur adjuvant boosts vaccine performance while causing fewer reactions and reducing stress post-vaccination. Also, if you every time you buy a bottle of it, you're automatically entered to win a monthly drawing for a fancy Greeley Hatworks cowboy hat. For more information, go to powered-by-spur.com. Not the end of the world. It might have felt like it on Monday, but you know, there was no blood coming out of the ring, is something we used to always say. And life went on. The sun came up on Tuesday morning. There was cattle at your feeder cattle auctions. The runs were light. You can imagine a lot of people decided not to sell their cattle. Just hate to sell on a new low. Might wait and sell them another $10 lower next week, is what we sometimes see. But and the cattle sold well in some places. Most of the time it was a far cry from what we'd seen up to last week, or the mid part of last week, but things are going pretty well. Box beef cutout values showed some significant gains on both choice and select. It's amazing how that worked. How do they raise the price on that? They ask more. That's it. It's not a negotiated price. They just ask more for it. It's basically a menu. They mark it there, and then their customers either buy it or they don't. So they asked more. We saw fat cattle sell. They did not bring quite as much as the light movement that we saw on Monday. They were a little bit lower than that, but not terrible. Maybe $3 lower live at the most lower. So that does not go with how much we lost on the board, but the heck of it is, your packers still need fat cattle, and the supplies of fat cattle are still very low. So you know they're gonna have to pay something for them, and they're gonna have to get some because they're wanting to increase the harvest because they've got a lot of needs to fill. They've backed off on the chain speed so much here over the last several months that they don't have a lot of product on hand. So, you know, that's kind of the way it goes. You know, your board can just jump around, and funds and algorithms can run it one way and then the other and back and forth. But you can't move the cash market. You can't turn it on a dime. You know, it gets in motion, and then it's got so much inertia, it's going to take it on forward, and it's hard to get it dialed back in. But that's what happens when we let the futures run the cash, which is what we've done. The futures are supposed to be a derivative of the cash, and then it's supposed to prognosticate what's going to happen down the road. But we've gotten to the point where people think that the board is the market, and I hear it all the time on radio broadcasts. Your Farm Bureau is the worst. They say that the cattle market is this and the cattle market is that. It's just the futures, guys. The market is the cash price. The futures are the futures, and then the futures have been very, very volatile here of late. December live cattle futures have dipped down around $7 just since Friday. Does that sound like something you really want to stake your claim on? December live cattle futures have gone down $15.70 since they topped on September the 15th, which was their high. You know, the cash markets just don't move quite that much. Now, we have seen calf markets go down 20 bucks this week with your feeder board, but my God, you know, your feeder board's been down so much, and you think, well, what's wrong with the futures? How were the cattle futures set up to work? Well, they were set up to work with a long hedge. And a lot of people don't even know what that is anymore because we've never talked about it anymore. The contracting, the alternative marketing agreements, the AMAs that your corporate feeders love, to tell you that's the only way you can get paid for cattle. But the AMAs, forward contracting, video sales on feeder cattle that have the far out delivery, those things have killed the long hedge. Absolutely killed it. So we're lopsided on the board. The way it was supposed to work is cattle feeders would short hedge their cattle on the live cattle futures. They would sell the board, short or sell the board, because they knew they were going to have to sell cattle whenever they got to slaughter weight. And then your packers would go a long hedge, so they would buy the board because they knew they were going to have to buy cattle in the future because they were going to have needs. And then those two would kind of balance one another. And then on your feeder cattle, which came long after your live cattle contract, but calf producers would short hedge the feeders because they knew they would sell their calves and they'd be ready to go into the feedlot. And then your feedlot buyers would long hedge to offset their risk because they knew they were going to be needing to buy feeder cattle to fill pens in their feedlot. And those two would balance out. But when we've completely, and I mean completely, erased the long hedge, then we're just heavy on the short side. Well, who's going to pick that up on the other side? We talk about it all the time. All it is your speculators and your fund managers. And the way that the CME has changed the rules over the last several years, they've done it all to attract more trade, and they've done everything. The change that they've made has been to attract your short hedgers, and it's pretty much run all of our longs off. It's run them completely off. The threat of delivery is haunting them, but then they make it hard to deliver. It's just there's no reason for any longs to hang on. Sure, not in the spot month. Now, they might roll out of those spot months as they start to come to realization. That's why I say everything looks like a mirage. We got these big prices out in front of us, and then as they come to us, they just evaporate because all your longs are scared off on your board. But I would think there's something we could do that's better. And a lot of people have gone to the LRPs on their background in cattle. Not nearly as many have done that on cattle feeding. It doesn't work as well. Your gross margin policies, if you work with somebody that knows how to do that, those work better for your cattle that are in the feedlot. But the heck of it is, those insurance companies that you do the LRPs through, they're going to make a hedge on the board because they have to offset their risk somewhere. So it's really frustrating. And then whenever you see them pull the rug out from under them, which has a lot to do with algorithms, because they can make 100 trades before an actual trader could put a trade in, either back in the old days with their hand signals, or even nowadays on the computer. The computer can put in no telling how many before you could get one order put in, with a person. And it just rolls that thing. Whenever it sees a little bit of trade backing up, it just rolls that thing. And it's frustrating. And then you see what it does to your cash market. You see what it does to people's equity. You see what it does to families. You see what it does to people that are trying to scratch out a living here. There was bound to be a better way to do it. Let's talk about your board on Tuesday, October live cattle futures. We're up $1.75 because cash can't go off that fast. And we're sitting here towards the end of October, so it has to come back some. But it closed at 180, which is about $4 to $5 lower than the cash we're seeing. December was up 27 cents at 178.62. Now all of a sudden trading at a discount to what our spot market is. Your back months were mixed from down 47 cents to up 22 cents. Feeder cattle, October feeder cattle, now we're going to have a cash settlement on that here in about 10 days or so, or less than that. Yeah, it's already the 25th. We're going to see that at the end of the week going to have a cash settlement, and nobody's really sure if the CME cash feeder cattle market is going to back up that quick, because it hasn't been responding the way it's supposed to of late. So they had to bring it back up $1.80 to 239.42. November feeder cattle, though, and all the rest of them nearbys were down. November down 37 cents at 235.42. Your back months were down 85 cents until you get to your farthest out traded months, and they were up as much as 55. December corn was down 6 1/4 cents a bushel at 4.84. November beans up 8 1/2 cents at 12.95 1/4. Kansas City hard red winter wheat for December down 7 3/4 cents at 6.63. We did see a little bit of fat cattle trade that happened on Tuesday, but they had about 10,000 selling Iowa late on Monday, and it was mostly 185. Well, Tuesday's market was about $1 lower than that. We sold about 3,500 head on Tuesday, confirmed from 183 to 184 in Iowa, and some dress sales at 288, which would be like $3 lower. Nebraska, only 300 head confirmed sales, 600 head for the week. The only price we saw in Nebraska on Tuesday was some 290 dressed. And like I said, there's been a lot of cattle contracted already this week, but we won't see that until the end of the week wraps up, and then it'll be all mixed together. We won't really be able to see what happened, but I assume there's been a lot of cattle forward contracted for the next few months around that 185, and that was a very good basis for them to work with the hedged feeders there. We did have a brick and mortar fat cattle auction, Stockman's Livestock Market in Yankton, South Dakota. About 2,000 fats on hand there, and you think, oh, I bet it was a wreck. No, packers need cattle. That has nothing to do with the board or anything. Packers have a need for cattle. They've got all those hooks in there and nothing to hang on them. So when you see regionals get aggressive in there, conventional cattle sold from 181 to 185. That's steady to $2 higher than last week. Your program cattle, the drug-free or non-implanted cattle, sold in a pretty narrow range from 182 to 188, and that was kind of unevenly steady at Yankton on Tuesday. Box beef cutout values, I told you they were higher. Choice cuts up $1.44 at 305.98. Selects up $2.98 at 284. Your slaughter, 251,000 estimated harvest through the first 2 days of this week. That's exactly the same as this point last week, and 6,000 less than the same week a year ago. If you're looking for fast and efficient cattle financing, check out Legend Bank. They got a couple of guys in there that's what they specialize in is cattle financing. Most banks don't want to touch it anymore, but get a hold of them at Legend Bank, and that's in North Texas. They're the biggest cattle financiers in North Texas, but they can help you in all of Texas and all of Oklahoma. Greg Brooks and Ricky Taylor, that's what they're doing all day, every day. And get a hold of them there. They can help you. They understand what happened on Monday, and they know how your needs are. But Legend Bank is a member of FDIC. All loans are subject to credit approval, and they are an equal housing lender. For more information about Legend Bank, go online at legend.bank. Talk about your feeder cattle market, your real-time index on DVAuction. Late in the day on Tuesday, sitting at 237.62. That was down 266. Now that real-time index is just like your CME cash feeder cattle index. It's a 7-day moving average. So market tanks one day. It wasn't down that much on Monday, even though your cash sales were down a bunch. But you get 2 days with the market down off, and then it starts to come off in a hurry. You talk about your big sales on Tuesday. Ozarks Regional Stockyard in West Plains, Missouri has a good market every week, but only 1,700 head through the ring. A lot of guys just decided not to ship them. They didn't have to. Nobody said they had to. They decided they'd wait and see. And then they only had 122 on their in-house video on DVAuction, which they normally have a lot more than that. But a lighter test of calves in West Plains, Missouri sold $15 to $20 lower. That's what we saw in Oklahoma City. It's what we saw in Joplin, basically. But that was in a light test. We got some premium kind of sales up in the Northern Plains that sold significantly better than just your commodity cattle sales. But Philip Livestock Auction, Philip the Giant was your NationalBeefWire stick-out sale of the day. 6,100 head when I pulled this to do the feeder flash, and they were still selling cattle, guys, I think. But look at your best tested weights, and it was almost all spring calves. But 2,320 head of 5-weight steers in Philip, South Dakota on Tuesday. They averaged 547 with a weighted average price of $295. That's 13 bucks lower than the weighted average last week on a slightly lighter run. Had nearly 1,100 head of 6-weight steers in Philip. They averaged 623. The weighted average price of $270-216. That was down about $14.50 compared to last week. Look at your heifers. 520 head of 4-weight heifers, average $460. Weighted average price $271.84. That was about $25 cheaper than last week. Of course, that's on the 4-weights, which bring a bigger price, and $25 on them isn't as much as $20 is on 6-weights, of course. But 886 head of 5-weight heifers, average $552. Weighted average price on those $265.33, and that was about $17 cheaper than last week. I mean, you see how much we've taken away from our calf producers there, guys, just on a whim. But look at some other markets from all around. How about Bluegrass Stockyards in Lexington, Kentucky? That's the big flagship location there. Really top, fancy location, as nice a stockyard as they have anywhere in the world. But Bluegrass sold a lot of loads of yearling steers, and look at all these loads of yearling feeder steers there. Most of them were weighing from 830 to 940. They bring from 221 to 233. That's not all bad. Load weighed 741 at 244.5. Those cattle are going to be fed in cold weather. Most of them are going to go to the Northern Plains to feed. They usually do. If not to the eastern, they go up north to the eastern Corn Belt and feed. And they don't have the hair that a lot of cattle have, but they still bring in a big price. How about Unionville Livestock Market in Unionville, Missouri, north central Missouri? They get the rockin' R's in there, which a lot of people have started calling the smoking R's from what the hell they sell. But Rockin' R from Lucerne, Missouri, they had 4 loads of yearling feeders in there. They're backgrounded, but they know how to do it. They had 4 loads. There was 248 head altogether. Those loads averaged 892 pounds head, and with a weighted average price, or just an average price of those 4 loads, at $244.78. How about Lolly Brothers Livestock Market in Macon, Missouri? They sell some lighter yearling heifers. 85 of them, all black heifers, had a good weigh up. Quality was outstanding. 85 of them weighed 656 and bring 266. That ain't much cheaper, guys. But I thought I'd give you the best quote that I saw on Tuesday of calves. That was in Philip Livestock Auction in Philip, South Dakota, the one that was a stick-out sale. They sold 110 steers in one drag, weighed 524 and bring 325.50. That's nothing to sneeze at, and not a whole lot lower, guys. But then your Macrocin, no BS, top quote for the day was the best big yearling price that I saw, and that came out of Atkinson Livestock Market in Atkinson, Nebraska. 67 steers, weighed 927 and bring 241. And that's your feeder flash for Wednesday.